and the analytic part of the show is over, and now we're bringing in someone who really has great technical ideas. Every time I talk to him, Zach Manis, how are you, buddy?
I'm good. How are you,
Really,
Dale?
really great to have you back. It's been such a long time, and so much has happened. Mainly the elections. Has that changed anything since early November? Like counts that you had going into it, did the election reinforce them, or
I think
did
getting
you?
over the resistance that we were looking at back in November for a possible B wave put us into extension mode in the market. And then it's just been tracking and heading higher. And you guys were calling it like a narrowing wedge pattern. We've been looking at the subwaves and the broad market and calling it a non-overlapping ending diagonal.
Okay,
But until we break any serious support, then we're looking for possible further extension. Ideally coming into a possible top, but it could only be the top of a third there.
yeah,
Um,
but you could get a pretty nasty four,
right, right.
right? So that's why people are stalking it, even if it's a four. And I wanted to ask you while you're sharing the screens, you have the bears who say, they think this is it. Um, and then isn't it possible? I saw a count where we could peak here for a four, trade back to 4,900, and then go to over 7,000 on the next rally. Can you see
um,
anything like that happening?
it's possible. I think 7,000 is a little bit extreme. I mean, I wouldn't be surprised if we got up there. I wouldn't be looking at it as a
Well,
rel
I'm talking about 4,900 first.
Oh,
Okay,
um,
from in here, 62, wherever we peak, is that we get a
trying to find
pullback
where I
to
can
wave
share
four
my
of lesser
screen.
degree as
I would
49.
I think if we start to break under the 5,200 region, it starts to get less reliable that we're going to that we are
Come
going
back.
to head up higher. Oh, here we go. Here's there we go. Uh, all right. Oh, so I had that on
Got
gold.
it. Got it.
Um,
Okay.
I'll go over to the S&P and we can talk about that first.
You think, oh, well, we're here. Let's see. Okay. All right. So you have five up there at 62. All right.
Right. So the support for this very extended ending diagonal off of the October 2022 low. So the alternate way that Garrett is leaning more towards is that this is the wave one instead of back here, and then this is an A, B, C up for wave three just now trying to complete, and that could even get another 4 or 5 closer to the 6,300s. But then you can come back down, and 4,900 would certainly be still valid as a fourth wave. I just think if we're going to hold as a fourth and get another push higher, um, under 5,200, that gets less reliable. Certainly still
Okay.
possible, but not something that would be as certain. A lot of other things would be breaking some pretty key supports for them to get further extension there.
Okay.
But at the small degree, I like that same level. At the very small degree that you guys were talking about on the ES, in terms of another 4 or 5 of this C wave inside that minor degree fifth, that you still have the 5,800s in the S&P as possible support there.
Okay. All right. So it does look like even if this is a four, you're going all the way out to 26, 2026, 3,200, one big ABC.
Yeah, I mean, I think this definitely pushes a lot further out in
Yeah.
time
Yeah.
as we've extended and compressed that.
All right.
So, but yeah, that's I mean, I think whatever top we make at a larger degree puts us into at least 5 years or more where we're just getting volatility and trending more sideways as we chop down to retest some of those numbers, at least that we saw back here in 2022 and very possibly back here from 2020 at the least.
So this is no longer an expanding flat because it's gone too far?
Yeah, it's once here you could have still been a B wave of an expanded flat, but the degree of consolidation that I think that this really should be if we're coming into a more significant top. Whoops, didn't want to go to um it shouldn't be an expanded flat this early. If this really is a super cycle degree wave three topping, then the super cycle degree wave four, should take quite a while. And that itself can be an expanded flat, but that you wouldn't have an expanded flat so early on inside a larger A wave. It's just not very typical.
Okay. Um,
But
I
we like
wanted
to
to
keep an
ask,
eye on the RSP also because I think there's been some divergence there lately,
there
and
has been.
sometimes that tells a different story.
Yeah.
But you can get the same, where this is a slightly larger. I mean, this still counts as wave two, the low here. If you're not counting it as an ABC for wave five, if you're giving this an impulse, so then this whole thing can be an ending diagonal that gets five waves. So again, you can come down towards the 160 region, maybe even below for that four, and then get another move up towards the 200 level as a fifth wave if this is not the more significant top. The difficult thing is that even the start of a bigger consolidation, either this A wave or the possible wave four are going to be a similar looking ABC correction. So even if you think that it's a bigger move starting, you see an ABC down into the 160 to 150 region, you still play that long for what you hope is just a bounce, or maybe you hope that it does extend to wave five. If it's clearly a corrective bounce, then you take some precautions. If it starts to get more aggressive, then you look for opportunities to press that on some dips.
Okay, I wanted to ask you something. NVIDIA was a star. It was like as famous as Bitcoin is now a year ago, right?
Yeah.
Wasn't it a celebrity? And I show it breaking down now. I'm bearish. I was wondering, can the market survive the largest market cap company? And I think that's why the Dow has been weaker because
I
they
mean,
moved
I think in a
NVIDIA into the
vacuum,
Dow.
I don't
Huh?
think that one stock makes the market, but I think one stock is kind of like, it's the mascot.
Canary? Canary.
Right. Exactly. But at the smaller degree, we're following this ending diagonal pattern off of the August low, where this should hold the 124 region as a fourth wave and then get one more push up into the 160 region.
Okay. What's about alternate bear case?
What's that?
If it doesn't hold that, if it doesn't hold 124, because actually it
I mean, it's
measures it
filled out.
measures 112 to me,
Right. I mean,
the
it's filled
formation.
out at all of the other degrees. It looks very, very complete in this cycle wave three. So tracking this is just an ending diagonal extension post the split and further extension. There's a similar pattern actually in Bitcoin for that to hold a fourth and get one more push up before it consolidates. And I think you even have MicroStrategy also that is filling out a similar fourth wave and then sets up for one more push higher.
With Bitcoin.
Also, it's post split, so that can be more bullish long term. But this is certainly finishing up a pretty stellar long term move and huge move off of the 2023 2022 lows. But one more 4 5 and it's hard to argue strongly for much more than that.
Okay. You had gold up in the
Yeah.
beginning.
I actually still think that there's some potential for silver to outperform gold. But so far it's certainly being the weaker of the two metals. But at the larger degree, would still like to see gold make one more high up towards the 3,000 region. It's possible that just nominally getting over the 2800s from the October high is enough to complete all of that move, but it should make an attempt. I do see the same thing that you guys were talking about, that more bearish potential where this was a more significant top and this is some sort of B wave. But you didn't get high enough here in December for this to be an A, B, and a C and starting the C wave down in gold. So even if this was more significant and the larger three topped, and you should try for more of a B wave bounce, and then come down as a wider flat. So I'm looking for the 2650 to 2630 region to hold in gold and at least make a play back towards 2800. And then from there can hold support again and head to 3000.
Would the miners participate? Because they certainly didn't. And are they just still victims of tax loss selling?
I think that could be a lot of it. GDX has the same structure off of the November low here as this wider
Yeah,
flat, but
yeah,
it can count as a 1-2 start in something bigger. Maybe I'm a little bit biased because we run an entire service that's dedicated to the metals, miners, and agriculture. But this structure, there was not a lot of clarity off of this low in terms of a clean start to the microwave one of this third. So it filled out the same wider flat, just like gold. But holding that 618, it could drop down to 3560 to tag that 764 retrace. But holding a higher low off of November as this wider flat, and that's an expanded flat also. So that the Elliott wave implication, because that micro B wave made a higher high, even nominally, is that the underlying trend is stronger to the upside here. So if it can turn around off of this 36 region, can get a pretty quick move up towards 42 as a third, and then another 4-5 from there can be a bigger wave one in the start of a really nice extension that I think could be taking the miners towards the 60 region.
wow. Okay. So that's a big value trade down here to stalk.
I mean,
Um,
certainly the risk reward off of the
yeah,
November low is pretty
yeah,
stellar, and that starts to deteriorate if it can't hold that 3560. So if you're looking
right.
at even a tighter risk reward from this support region, then it seems like a pretty phenomenal trade.
Okay. Does it tie in with the dollar peaking?
I do see a lot of weakness coming in the dollar. We got this higher B wave alt, which if it's complete, which I would like it to be, but it has to count as an ABC for a Y wave. So the proportions here don't look like a 1, 2, 3, and a 4 and getting a fifth wave up. It's not so common that your wave one is the longest wave, and then your 3 and 5 are successively shorter. It's not against the rules. The only rule in Elliott wave really is that wave three can never be the shortest. Even in a diagonal, that's the one rule in Elliott wave that can never be broken. So if this is getting a fifth wave of this yellow C, then it's going to have to be shorter than this move that you'd count as the third. But I think this looks better counted as a WXY that just took it right up here to the 618 or pretty close enough. And you can count 5 waves down off of that. So
Right.
that wouldn't be wave one of a bigger drop. That would be wave one of a possible bigger drop starting. In the smaller degree, can get another pop up towards 107 before that tries to turn down in the third.
Okay. I think the high was 108 on my platform.
Well, right,
Uh,
the high here back in November. So I'm talking about just one more pop here towards 107 for more of that wave two.
mhm. Okay. All right. Anything else top of mind for you going into next year?
Um,
Your overview here, Zach, of
My overview,
yeah,
I still like oil and gas. Looking for those to hold support from moves up off of the September low. Getting a little bit deep at the end of this consolidation, but we are just barely under the 618 retrace on XLE.
All right,
But
this is uranium here.
we really do like the uranium names.
Oh, okay. All right.
They look very, very strong. This is part of a nested setup that goes back. There's a primary degree and then also the intermediate degree, 1, 2. And now we can count 5 waves up for wave one. Some of the individual names count better as a fifth wave here. They got nominally higher. And so those might just be the A wave of a wave two. So they could get a B wave bounce and then a C wave down in more of their wave two. URA, the ETF here, looks like
Yeah,
it should get a fourth and then a fifth wave down towards that 27 region. But that then provides some phenomenal long-term risk reward off of this August low for some bigger moves. So if it starts to break under 26, then this high back here was an alt fifth wave of the larger primary degree, and it can be coming back down to test the 20 region. But so far, it's looking very nicely corrective off of the October high. Is a nice
great look.
consolidation.
I'm gonna trade that. Um, I was gonna ask you, what was I gonna ask you about? Just
We still really like Tesla long term also, but it's due for a little bit of a breather. Um,
okay.
you
Oh,
know,
I was gonna ask you about TLT because I want to ask you about the move index. Okay, so everyone's saying, well, not rationalizing, but saying that the bonds should be bought because they're coming down with the move index not even moving, which means there's no stress. It's kind of like the VIX saying there's no fear, but there's no stress, and we keep selling off. It's not
right.
necessarily bullish TLT, is it?
So I track the futures, the ZB futures on my data feed. It's US, a little bit closer than TLT. I replicate the same count on TLT, but I trade TMF and then I trade the ZB futures more than TLT itself.
Okay.
There was a chance that this was all of a double bottom here for this fifth wave, but once we broke under the 117 region as a corrective retrace to head immediately higher. It looked more like this was just a fourth wave and we're coming down in the fifth. But there's a lot of confluence for support in this 114 to 113, 300 region as a wider flat off the December high. So a big ABC expanded flat for this B wave and at least sets up a measured move. Garrett and I disagree whether or not this can be the A wave and the start of something heading to potentially new highs for bonds. But we're both looking for that swing move up towards the 134. On TLT, pretty much looks the same. Filling out, I just don't have all the subwaves filled in. Zoom out one more thing there. So same measured move up to 109 to 114 would be the most ideal. I think heading because you have the B wave that made a nominal higher high here, then
Yeah.
pushing up towards 114 and TLT would make more sense. But that you're gonna need to see the wave one get closer to the 97, 98 region to have a better shot at the C wave getting up towards 113. So
Because that was a pretty ugly week for the move index not to move last week, right?
I don't know. I'm not familiar with the move index. You have to
It's
educate me.
yeah, it shows stress in the treasury markets.
Okay. Have you
So
tried counting waves or looking for patterns on that, or it's just more of an oscillator?
I think it's like the VIX.
Okay. All right.
It's what people are saying. Only I guess there's a difference between fear and stress. I mean,
Right.
I could be I'm stressed all the time, but I'm not afraid of it. I'm used to it. Anyway, some great looks, Zach. So I think we're going to have a good trading year. How did you like trading under the first Trump presidency?
I mean, COVID volatility was amazing. It was phenomenal for subscriptions when everybody was working from home and
Home,
the markets were going
yeah,
haywire, and it
yeah,
was some of the most fun trading, day trading opportunities because you had moves that were setting up an Elliott wave as swing wave moves that were then playing out in 3 or 4 days,
yeah.
which was much more of like a day trade or a scalp.
Yeah.
So, if we bring back some of that volatility, even if it oscillates and ends up net positive, to the upside, just chop, tends to be more fun than, constant grind.
Okay. All right. So you're going to have your best 4 years, buddy. And I really appreciate you coming here every quarter, Zach, and sharing your great counts. There is as many Elliott wave patterns as there are analysts, and I talk to a lot of people that do Elliott, but I always come away with something like your post on the uraniums because I've been watching them for a while, but it looks
I
like
mean,
you could have watched them for a while, and this is going to be a pretty important inflection
right.
point for them.
We just did our Stockaways webinar on Thursday. We did a deep dive on looking at a lot of the individual ones, some of the smaller ones that we usually only cover in the metals, miners, and agriculture service. And it's an
Yeah,
interesting mix of the ones that lean more to this being a 4-5 that didn't really get as much. Here you have a very complex consolidation into the 2023 low. Didn't quite get deep enough into that 382 to 618 ideal fib support region to be the most reliable for all of the primary degree at the time.
yeah,
But then once you got this fifth wave up, that could have been the fifth of the extension, which some things like CCJ was leaning a
yeah,
little bit more towards. There's a few other things where that look a little bit more like this is the fifth of the bigger primary wave one. But then, you know, that was the look a couple months ago. But then once most things got five waves up off of either their July or August lows or some of them off
yeah.
of September and are holding this corrective consolidation off of that high, really looks, over 34 should be a pretty massive breakout in a lot of these.
Yeah, it looks like Bitcoin did before it broke out, like a handle there, cup and
Oh, yeah,
handle
yeah,
a little
absolutely.
bit.
Absolutely.
Well, I hope you have a great holiday and great year coming up, and we get to talk along the way next year to a change in a lot of things happening. I'm sure that there's going to be massive trading opportunities over the next 4 years. And you mentioned you're covering. I'll need to see a chart. Are you looking at the grains as potentially putting in significant lows
A lot of them seem to be trading at
range?
low ranges, but the
Yeah,
the patterns are, there's completed patterns to the downside.
yeah,
There's not a lot of constructive off of lows yet. We have been tracking cattle futures and
okay,
trading within this structure, heading higher for more of a third in a diagonal
yeah,
and this D wave up, and it's been filling out really nicely. One of the things that Garrett and I have noticed, which, if we ever write a book, our own Elliott wave book, is that the C waves inside thirds of diagonals often tend to turn into diagonals themselves. And so, here's another good example where we're seeing that have that ABC structure up for wave one, AB structure inside wave three, and then we'll look for that 4-5 up towards the 199 to 203 level for cattle.
okay. So people are interested in how they could follow you, get involved with you. Zach, you want to show them? You could give them the
So
website or
at Zach Manis,
okay.
ZACMANNES on X or Twitter. And then the Stockwave service and the metals, miners, and agriculture service on ElliottWaveTrader.net.
ElliottWaveTrader.net,
Uh-huh.
led by Avi Gilbert, right?
Absolutely.
Okay, and so he has guys like Garrett. What a strong team, So uh, great talking to you again, Zach, and
You, Dale.
yeah, some interesting counts, and you've provided me with ideas. I appreciate your giving nature to do so. Thank you.
My pleasure. Have a great holiday season.
All right, Zach Manis, everybody, check him out on X at Zach Manis, and he's really a great wave guy, and he's got a pretty calm demeanor. And this pullback in golds, I'd like to see what he's looking at for buying some, what issues he's looking at, because I don't think we're that far away either. Even though I think we could see 27 silver, 27.50. Hi, Lorena. Okay, everyone, have a great day. People are thanking you, Zach. And that's going to be a wrap. Don't just count your pips, count your blessings.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.